This is just a short demo of the layout of financial statements. So the first financial statement we spoke about that we have to be able to do is an income statement. So this is really just showing us where how the income statement's laid out here. So the first thing we have to remember is that we should always have a heading, and the heading is income statement of and the person's name or the company for year ended. Now you'll tend to find it will normally be the end of a financial year or the end of a calendar year. In this instance here, we've got it for 31st of December 2020. What's also important to note here is that you've got pound signs at the top of your columns. As we noted for budgets, this just saves you having to keep putting pound signs after everything all the time, albeit we do tend to put pound signs after our very important total at the end. So we start off with the sales figure. Now the sales figure, remember, that's the selling price of the product that you're selling, multiplied by the number of products you've sold, and in this case it's 104,285. Now what we'll notice here is we spoke about this in the main PowerPoint that we have returns inwards or sales returns, and what's happened here is the organisation has actually sold products to customers or other companies and there have been faulty or wrong products. So the 531 has to be taken away from sales because we haven't sold them. They've been returned to the company. Taking your sales less your sales returns or your returns in leaves you with a figure called turnover, and the turnover is the net figure of sales less sales returns of 103,754 in this case. So that's our sales, really, if you like. That's what we're actually going to get from the customer. Now, what we have to then do is look at this cost of sales. What have these sales cost us? So we could have been left with inventory or stock on our shelves at the start of January 2020 to the value of 5,432. So to that we add purchases throughout the year of inventory 45,628. Now those two figures will be added together. However, we have these things called returns outwards or purchases returns, similar to sales returns where we have purchased from a supplier and we're not happy or the product is faulty or whatever. So that 135 has to get taken away. So 5432 plus 45,628 take away 135 will give you the figure of 50,925. Now there will be products left at the end of the year that we haven't yet sold, so we have to deduct those, and that's the inventory we have at the end of the year. That is going to be carried over next year on the 1st of January 2021 to be our opening inventory. So we're going to be left with 6,102. That gets taken away, and when we do that sum, we then have this figure called the cost of sales. Now that's a really important figure because that is really the cost of this. We have managed to sell for 103,754, and those sales of 103,754 cost us 44,823. By taking the 44,823 away from that 103,754, we are left with our gross profit of 58,931. Now ordinarily this would just carry on. Clearly I've not got enough room in this slide, so I'm moving on to the second part of my income statement, which is the profit and loss section. That gross profit of 58,931 is getting carried forward. We wouldn't normally put that in again, it's already there. And then we have to list all the expenses that we have incurred. Wages, rent, rates, insurance, all these things. Carriage outwards is really just the cost of us delivering to customers, the amount of delivery we have to pay to customers. So what we do is we add all of those expenses together, giving us a figure of 37,164. And when we deduct the 37,164 from the 58,931, we have a final profit for the year of £21,402. Once we've calculated the profit for the year, the next thing we do is we create a statement of financial position. Now the statement of financial position tells us the assets the business has, any liabilities the business has, and it tells us the worth of a business, how much a business is worth at a point in time. So once again, we have to have a heading, in this case H. Anderson. Our statement of financial position is at the end of the year, it's as at. In this case we put the 31st of December again, remember your pound signs. We start off with our non-current assets. Remember, these are our long-term assets, the assets we're going to hold on to for a while that help us with the operation of our business. We list these normally in value order and we come up with a total, in this case £179,000. We then list our current assets, which are our assets that are changing on a regular basis, our inventory, our bank account. any money that's owed to us by trade receivables, people who owe us money for goods sold to them. We add those together, in this case giving us £47,000. We then have to deduct any short-term debt, in this case trade payables, trade creditors, we might have heard that word, trade credit, when we talked about our sources of finance, any dividends due, any tax we have to pay that's due, all of these things are added up to give us, in this case, £12,000. The 47,000 we then deduct the 12, and this is a figure called working capital or working equity. And this £35,000 is the cash flow position of the organisation, the amount of ready-ish cash it's got available to operate on a day-to-day basis. This working capital gets added to our non-current assets of 179,000, giving us 214,000. We have to remember if we have any non-current liabilities like loans or mortgages, these have to be deducted to give us a true value of the business, because liabilities are not worth for us. These are not assets, we don't own them, we have to actually write these off, in which case the 80,000 gets deducted to leave 134,000. Now, a statement of financial position shows you the assets and liabilities of a business and how we manage to finance these assets. So the next part, the second part of the statement of financial position, is our financed by section, which shows us where this money has come from to enable us to buy all these assets. So we issued share capital of 105. We have profit from our profit and loss account or income statement of 29,000, giving us 134,000, which, as you can see, is the same in both cases. The business has net assets to the value of 134,000, and these were financed through the issue of share capital and profit. Thank you.